What's up, guys? Welcome back to Broke Man Finance. I am super pumped about today's video because it involves multiple things all in one company. We're talking money, we're talking stocks, we're talking engines, and we're talking airplanes. All things which I am super excited about. Overall, I'm covering exactly what the company does in this video, why their stock has really been so low, and why I'm personally adding it to my portfolio. So we're talking about Rolls Royce today. Now, this isn't the Rolls Royce that we're used to seeing involving super fancy cars in the movies with billionaires or superstars when it comes to athletes. The Rolls Royce cars are owned by a separate company. Instead, we're talking about Rolls Royce Holdings, which is a separate company that offers multiple products, with them mostly being known for aerospace side with the Trent Series Engines. Anything coming with civil aerospace or defense aerospace is their main product dealing with Rolls-Royce. Chances are, if you've ever flown on an Airbus commercial jet, it was powered by a Rolls-Royce engine. Also, several of our United States military aircraft are currently powered by these Rolls-Royce engines. When I was in the Air Force, I worked as a C-130 engine mechanic, and almost every day for about 8 years I worked on these engines. At least from my experience working on these engines, again, this is just one engine, which was a T56. These are quality products, and most of the time when we have to work on an engine, it wasn't the engine itself, it was a side component. Think of it as a Ford or GE engine, but the fuel pump or the starter or the something else involving an accessory component of that power plant was the issue that we replaced, and not the actual Rolls-Royce engine. So why exactly am I adding this stock to my portfolio? Well, to be honest with you, I never really looked at them from an investor standpoint. I was doing some research on another company and I discovered them really by accident. And once I started looking at them and what all they have to offer in the future, and really compared to why their stock's so low and where it can go to, I realized this was a good penny stock that I should add to my portfolio. So when I was researching my last Virgin Galactic video and getting some information to put in that video, I discovered that Rolls-Royce and Virgin Galactic had entered a partnership where Rolls-Royce would provide Virgin Galactic with an engine that would break the speed of sound by 3 times. Virgin describes the new aircraft as a Mach 3 certified delta wing aircraft with a capacity anywhere from 9 to 19 people that flies at an altitude above 60,000 feet. Now, I don't know what you think, but this to me is a pretty sweet looking aircraft. But it's a good sign moving forward with a partnership that Rolls-Royce and Virgin Galactic has formed, because this could bring in a lot of additional revenue for Rolls-Royce moving forward if this venture is successful. So once I discovered this partnership, I really started looking at Rolls-Royce a little more in depth, and I really started liking what I saw. So let's get right into it from an investor standpoint. As investors, it comes down to really 2 things: numbers and stock price. Really, where is the stock price now, and where can it go in the future, or where do we not want it to go? So I'm going to cover all those things as we move along in this video. Right now, Rolls-Royce is around $1.60 per share with a 1-year decrease of around 81%. So the 2 questions that most people are probably asking or going through in their mind right now is, why is the stock price so low? And is it still a good buy at $1.60 a share? Well, one of the main reasons why the stock price is so low is COVID-19. As you're aware of, earlier in the year when COVID-19 shut everything down, the airline industry and overall the travel industry took a major hit, which affected Rolls-Royce as well. The group's largest division, civil aerospace, is really bearing the brunt of this disruption. It produces and services aircraft engines, increasingly for wide-body airplanes generally with 2 or more aisles. Rolls servicing model charges a fixed amount on per flying hour basis. So having large amounts of planes, overall fleets of these airlines sitting on the ground, has an immediate impact on the revenue, profits, and most importantly, the cash flow. As a result, the company has to make major changes, and several of the changes they did was they cut their profit target moving to next year and the dividend payout. Now, this overall doesn't concern me too much as an investor if they change their target outlook. This happens all the time with companies, good or bad, because as revenue changes, especially industry like the travel industry this year, everyone's outlook changed, whether it's the airlines, Rolls-Royce, or even the cruise lines we saw. So overall, I'm not alarmed by this, because the companies have to do what they need to do in order to really adjust and really save the core of the company. And typically, changing the target projection of how much money they're going to make, or the profit they're going to make going into next year, and the dividend, a lot of companies either suspend, cut or completely do away with dividends into a future time, because they really have to see where their company's going to be at in the next year or so. So if we look at the stock price before all the shutdowns happened, it was trading around $8 a share, really with no major dips in the last 5 years. Here's one of the things that I like about Rolls-Royce when I started really looking at them as a company and what products they have. With any company, you have to be innovative, you have to be willing to change and adapt to technology, to demands of consumers, environmental concerns, the climate change. All these factors really affect different companies, especially engine companies, as they move forward. And Rolls-Royce is already exploring and experimenting with an electric engine. Rolls-Royce is gearing up for an attempt to break the electric airspeed record in a plane they have dubbed the Spirit of Innovation. On down the article, it talks that Rolls is working with a Norwegian carrier to electrify its fleet of more than 30 aircraft by 2030. Overall, I like the stock as a buy, and here's why. If we look at the totality of Rolls-Royce, we see that the massive dip in the stock price wasn't because of poor customer service, a crappy product, or just the ability to not adapt and be innovative. The shutdowns really affected the whole travel industry, and this isn't something that Rolls-Royce could really anticipate or really plan for as far as budgeting and revenue projections. So looking ahead to 2021 and beyond, as the travel industry is slowly making its way back, we see with like American Airlines, with Delta, even the European airlines, Rolls-Royce is right in that mix. As planes start flying more and more, Rolls-Royce revenue will start increasing kind of on the same pace with that, because again, with the customers and the contracts they have in the commercial sector, they charge based on each flight hour. So the more planes fly, the more ability they have to bring in revenue. But here's one of the things I like about Rolls-Royce. They're very similar to companies like Lockheed Martin or Boeing, where during tough economic times, they still have these massive defense contracts that really help keep the revenue coming in, while obviously they need the commercial airline industry to be successful to bring in that revenue. They're okay to weather certain storms like storms of 2020, where the revenue decreases because they can count on those contracts. Just to give you an idea of the contracts that we're talking about within Rolls-Royce and just the United States military, back in January, it was reported they secured another $69 million contract to help the United States Air Force sustain components of the T-56 aircraft engine. This again is the engine I worked on almost every day for approximately 8 years when I was active in the United States Air Force. And then as planes evolve and planes get updated, Rolls-Royce was also awarded a contract by the Air Force to help with the parts and procurement of spare engines for the C-130J model. Under the terms of over $100 million contract, the company will also obviously support the C-130J foreign military sales customers. I think overall, for a penny stock under $2 a share, this stock has potential to get back to anywhere from $6 to $8 moving past 2022 and beyond. I'm not approaching this as a short-term play at all. Of course, most of my stocks is a long-term play, and this definitely is a long-term play because the travel industry, the aircraft industry, is going to slowly get back to where hopefully it was prior to 2020, those 2018, 2019 levels. So the big question today is, do you think Rolls-Royce can help power your portfolio going into 2021? You like what I did there, don't you? Let me know in the comment section what you think. As always, stay safe, Happy New Year, and we'll see you on the next video.